Once again, good morning. I am Srinivas from Federal Bank. I am audible. Not required. So you are eagerly waiting for the GST, and he is also waiting for you. Before that, we will have another issue on EDPMS started in 2014. And the issue started though in 2014. Exporter community started thinking of it on the late 2015 when RBI came up with the caution listing. So we have EDPMS and also we have imported data processing and monitoring system together, two sides, both the EDPMS and the IDPMS. So I think this is very new, maybe very new for the exporter, but we are very accustomed, bankers are very accustomed to this, and all the workload is now presently the bankers are running pillar to post to reconcile the entries because RBI is giving some IT manual. Exporters also received, I think if anyone is having any export bill outstanding beyond 2 years, might have already received notices from the bank asking you to clear shipping bills pending in EDPMS. Because RBI started caution listing earlier, but due to the unreconciled entries or the sorry state of affairs with the different banks, RBI extended several times, and the last extension is maturing or being finalized in December 31st of 2017. So again in the 1st January, we don't know what RBI is going to think of it. So we will have just a look on export data processing and a monitoring system, EDPMS. This, the basic of it and what impacts on an exporter and what are the tools available with the RBI subsequent to introduction of this. This is a part of the monitoring, as the data processing and the monitoring system. We can process it and monitor it. So simple. So it's very, as kids play with the joystick, they can also play with this. And it's very, very interesting software so that the RBI can monitor each and every in IE code and the status at a real-time basis. So see, this is basically of an export. So export is regulated by certain rules, guidelines, and there are a lot of various stakeholders for it. As you know, the rules is the regulator of foreign trade is the DGFT, which formulates foreign trade policy. So Director General of Foreign Trade is the sole authority for giving the guideline under FTP 1520 and the handbook of procedures. So they will dictate the terms and conditions of an import or any cross-border trade. And in the foreign exchange side, Reserve Bank of India will say, because any money coming to India or going out of India in a trade-related or non-trade related, RBI has the last say. So it is monitored and managed by RBI through FEMA, Foreign Exchange Management Act. And various updations are given or modifications are done in FEMA through authorized persons directive series circulars, CPDER circulars. Every day 1 or 2 or changes are coming frequently. So the underlying rules, you see, the trade is always with the foreign trade policy and the handbook of procedures. Whereas in the foreign exchange, we have exchange control manual earlier. Now it is Foreign Exchange Management Act, and also certain of the exchange control manual are still prevalent, and also the various circulars or amendments are subsequently made by the Reserve Bank of India. These are the underlying rules. And who will monitor all this? We have seen that as an agency, rules are set like a police. Somebody has to check whether it is happening or not. So the customs is the person who to monitor the foreign trade policy, whether through customs whenever material are coming to India or exported from India, whether the exporter or the importer is following the rules of FTP, the customs is checking for the valuation, customs duty, import duty, etc. Likewise, when the money flow, anything related to money flow, bank will come into the picture. So authorized dealers, AD banks, are the implementing authority of the FEMA. So this is the basic structure, how the trade and the FEMA work for the management of the foreign exchange management works. This is the EDPMS software developed by RBI. This is HTC Global is the party, the software vendor. This is the software which has been developed by RBI, for RBI, which takes care of the entire import as well as export being done through any EDI port in India. EDI port, whether it is seaport or airport or a road customs. So we will quickly go through all these things, objectives of implementation, impact on exporters, processes in EDPMS, how it is processed, reporting deficiencies and implications, unsettled export bills which are due or not settled after the stipulated period of 9 months, what we have to do. Then the realization delay, if anything is happened, or unrealized export, how we can write off in the system. We will quickly go through one by one. See, earlier what was the scenario? You all are exporters. Imagine you are all exporters. You are exporting through it. You are exporting, say, to Hong Kong or Dubai or US or European Union. You will take the services of a customs house agent for filing a declaration called the EDF, Exporters Declaration, or the earlier we used to say GR or SDF. Once it is filed, shipment is made, you are supposed to submit the documents to the bank within 21 days. Say you are not submitting. Payment is not forthcoming. So you make some adjustment. Say, my relative is in Dubai, I am sending some chips. Normally from Kerala we used to have a lot of persons sending banana chips to Dubai. So say, my friend is doing a business and I am sending chips or vegetables or fruits from Kerala to Dubai, and I will say, okay, you keep the money there, don't send it. We will buy a plant over there. This is a possibility. So customs is making an export. Through customs you are making an export. Let Leo date is there, shipping bill is generated, but banker doesn't know whether you exported. RBI doesn't know whether you exported. Only customs know. Customs has a ritual. They will take the shipment, they will see the valuation, they will put the 2 seals, and they will go for a verification of the cargo, permit you to export. They will keep the duplicate copy, the original or whatever, the copy of the customs copy, and keep it in the yard. But this information is not being passed on to a banker or to the Reserve Bank of India. So the banker, Reserve Bank of India, is unknown about your export. So there is a gap. Because the data is not being transmitted from the customs to the controlling authority, say Reserve Bank of India. So that gap is filled with this EDPMS. So earlier, if you submit, an exporter submits the document, then only we were aware. Government is aware, Reserve Bank is aware that you have exported. So that gap is now filled with the EDPMS. So that was one of the objectives, that fragmented or disorganized reporting of exporters, because it is up to the mercy. After, if the customer requires, he will submit. If the payments or there are a lot of lapses, then even if you submit a document, even the customer, after making the export of banana chips, submits the document to the bank. Bank relates this information to RBI through a periodic return, fortnightly return, called R return, what we say earlier. We will say that the IE code and shipping bill number, amount, nothing else. Whether it is banana chips or whether it is sugar coated chips, nothing is wrong. Because the data integrity was very, nothing is there. Only the amount, the purpose, 2-3 fields we used to report. Why are you reporting? To find out the balance of payment position. Because we say that the forex reserves is 400 plus billion. And to calculate all these things, the RBI requires, or the government requires the data, how much export are happening in India and how much imports are happening to India. So the difference, the current account deficit, or everything is calculated based on this reporting. So integrity was the issue. Now what happened? With this entire data, what all you are filing with the customs, the data is transmitted to RBI. Full details. Who is the buyer? What is the country? What is the terms of the credit? How much grams, kilos? How everything is there. What all you are filing in the shipping bill, automatically it comes to even the HS code. What commodity you are exporting? That also can be monitored. Then, as you said, I exported chips. If I am not submitting the document, nobody knows. No revenue intelligence or directorate of enforcement or finance ministry, RBI, the banker, nobody knows. So there is a lack of fixing the responsibility or a follow-up. Only the banker can go for a follow-up only if a payment is received, you are not submitting the document. Automatically the bank will ask for what purpose you received the payment. Bank will follow up because of the KYC, AML reasons, whether money laundering is involved. Or why the payment is coming, from where you got the payment. So then the question is there. So fixing the responsibility, unless you have not submitted the document, nobody knows whether you exported or not. So that was also a problem faced by Finance Ministry, Special Investigation Team, SHA Commission, lot of us. So they finally decided to go for a EDPMS. Then again, there were a lot of things reported in a paper way. We used to take a lot of printouts, put signature and send in bundles to RBI, regional officers, central officers and all. All are paper-based reporting. And as you know, this WhatsApp page and the Facebook page, what the paper will do? Who will go for the paper and the consolidating and all? So all paper-based reporting is finished. No more required because there is a central platform. Take care of the all imports and all export data, customer-wise, AD-wise, IE code-wise, data is there. So there is no paper-based reporting of overdue bills, unutilized export advances, and that were all inefficient and time-consuming. You see, RBI in 2015-14, they came up with the unutilized export advance reports. They asked to report to the bank those customers exporters who are received advance remittances against export, and no export is being made. Or even if they made export, they have not submitted the document. So banks need to report to RBI in a quarterly manner of all chronic and doubtful cases. So if the bank doubts about your inflows, we need to submit. And that doubtful or chronic is, I will feel, sometimes you are a chronic, or he is a chronic, or she is a chronic defaulter, but other bank will, there is no standard set of, say, marking or grading or coloring or anything to identify whether he is a chronic or there is a doubtful, because no parameters have been set. So that also time consuming, and it was also not a rationalized format. Then various, as I said, various returns were there. For a better monitoring, RBI also required, or special investigation or finance ministry or enforcement directorate requires the real-time data. So everybody started thinking of a common platform. Then data, how it works, is the data for both the software exports as well as the merchandise export. First, what you have to do in merchandise, you have to go for a shipping bill filing. Then the data from customs will automatically be transferred to this EDPMS server of State Reserve Bank, and subsequently filtered and given to the particular AD, because you need to tag an AD to a shipping bill. Similarly, in STPI or SES, whenever there is an export, the similar data will be passed on to State Reserve Bank of India. Then, as I said, the monitoring authority for a FEMA or a foreign exchange is in AD Bank. So with this, when you approach a bank for making an import payment or you are receiving an export advance, now through this system, we are reporting and we are monitoring. Bank also need to do a lot of work on this. So the foreign exchange angle or other statutory regulations can easily be monitored. Because when you receive an advance remittance against export, it is you under obligation. You are under obligation to export, make the export, execute the order within 1 year from the date of receipt. That's maximum count. Before that, you have to make the physical export and submit the documents to the bank. Yes, if you fail to export, if you want to refund the money, you have to refund on before the 1 year, elapsing the 1 year. Or if you want to refund the money after 1 year, you have to approach the RBI. So these can be easily monitored by the bank through the same EDPMS system. Because each bank will upload whatever remittance you receive in EDPMS. Then easier tracking, as you said, because the very impact or the requirement or the purpose of implementation is easier tracking and generation of export transactions, because if RBI or any stakeholder wants any particular data on a particular customer, how much is outstanding, how much we exported, all the details can be generated within the touch of a finger. So this is also one of the objectives. Then, of course, we were having a lot of physical as well as paper-based reporting or monitoring, because from 1999 onwards, the FEMA says the C10 of exports, master directions of exports, they say follow. You should follow. Banker should follow. What banker can do? We can do a maximum send a letter to the exporter. Please arrange the repatriation or realization. Beyond that, the banker cannot do, because these are always RBI. Whenever comes for an inspection, they will also make a point as a comment, as well as the internal auditors of the bank also make a comment. If 10 or 5 or some bills are outstanding for a particular exporter, beyond 6 months, they will also make a comment. Because these were things, because beyond the powers of the banker, because it is up to the exporter to get in touch with the overseas buyer and get the money to India, repatriate the money to India. So this type of burden, substantial reduction is happened. Now RBI themselves is coming with these are the list of this much bills are outstanding for a particular exporter. RBI themselves are sending notice to the customer and asking them to be in foreign line, or they are asking them in personal meetings with the RBI regional officers. So with this, what will happen? We are having a reporting discipline among all the participants. As I said, it is the obligation of the exporter, after making the exporter, to submit the documents within 21 days to the AD bank. Previously, this was not happening, because we don't know whether the customer, ABC and company, has made any export. But now we will know, because RBI knows, or any stakeholder knows who exported yesterday, or whose IE code. We can identify the IE code, and we can simply, in a fraction of a second, we will get to the reports of a particular IE code, how many bills are pending with him. So a discipline has to come. So now you cannot keep the bills, as I said, the chips exported and the bills, shipping bills generated, I send it directly to my cousin, and the copies which need to be submitted to the bank, I can keep in my wardrobe or my table, ignoring the presentation to the bank. Now it's not possible, because we know otherwise. We are holding the document. RBI knows. So there is a discipline. Then, as I said, it's an integrity is there, and a process discipline is there. Each what to do, who to do. Exactly the right mentioned. Which bank, what to do, and what is the job of the bank, what is the obligation of the bank, what is the obligation of the importer, what is the exporter, and a clear line is there. Then, for monitoring and the follow-up of realization and the reporting, better visibility is there. The same scenario, the chips, again the documents in my drawer, things now it is not possible, visibility is there. Even we can identify with the HS code, we can identify from the port code, how much from Navasheva port, how many exports are happening, or what is the material exported, who are the players. These are possibilities are there because data is there. Different type of data is available, and only you have to arrange. Any agency want to arrange and identify what is required. So these are the possibilities are there. Then the biggest one is real-time caution listing, requiring the exporters to be more aware of the reporting responsibility. So RBI came up with in 2016 about the caution listing. Earlier we were not aware that there will be a caution listing subsequently coming. So now we only know about a caution listing. We don't know tomorrow what RBI is going to do. Because it is so simple, we can impose discipline on an exporter. Because various agencies are involved. Unlike if a single agency is looking into, they know the every aspect of it, and that agency can do. But here, different agencies are there. The customs is there, DGFT is there. Somebody is giving the drawback. Somebody is taking the export incentive. EPCG is involved. A lot of programs, a lot of issues are there. So it's a simplified manner. And if anybody is not following the rules or guidelines, RBI can put a stop or a radar on it. So real-time caution listing, de-caution listing is there. Then EDPMS was operationalized from 28th February 2014. That was the live, gone online from 28th February 2014. And all shipping bills generated from 1st March 2014 in EDI ports is started flowing in the system. So at that time what RBI said, there were prior to 1st March, there were a lot of shipping bills pending. That will be continually for, that will also side by side go for the earlier manual system. All shipping bills generated or soft text forms generated from 1st March 2014 is now being taken care by the EDPMS. So improved visibility is there. Reporting discipline already told. Additional modules, they started again, though it started in 2014. Every time there was a lot of changes and additional modules were also implemented. And it starts for XOS data. As I said, there was a return, a half-yearly return for overdue export bill. A bill becomes overdue if it is not paid within 6 months from the date of shipment. That's an overdue bill. Earlier, we have a different time period for different type of exporters. Example, 100% export-oriented units in technology parks, unit in CES, STPI, or normal units in DTA have different time period for realization. So normally it's a 6 months, software 12 months, some others having 15 months. So different time period was given. Subsequently it was rationalized. Now, and now RBI says the maximum period can be allowed is 9 months. But that's an extension. Originally it was 6 months. And now extended up to 9 months. So, earlier we used to report to RBI any shipping bill outstanding beyond 6 months from the date of shipment to RBI in a form called XOS, Export Overdue Statement. So this is half-yearly done in June and December with a value of $25,000 or above, any invoice value, whatever may be the remaining, even if $25 is remaining on an export bill, having an invoice value of $25,000, we have to report in XOS, and it is separately monitored by the regional officers of RBI. So you take there will be a legacy of data with each brand, because we started reporting from the starting when the bank started, the data will be there. That's being carried over, and the data is being given every half year to RBI. So RBI said, okay, you do one thing, you migrate everything to EDPMS and stop reporting XOS. So what all outstanding XOS, that means the shipping bills dated prior to 28th of February 2014 and outstanding in the system beyond 6 months and reported by the bank as an XOS is also being migrated to EDPMS. So in the nutshell, all outstanding bills unrealized is being captured in the EDPMS. So this is an additional module they came up in June 15, 2016. And they said, okay, you don't do for the advance defaulters report. That I said that those who are receiving advance quarterly report need to be submitted. No need of it. And what they said, okay, do one thing, you report all the advance remittances also, started capturing. So if you receive any advance remittance, automatically the bank will, after appropriating to your account, on the next day, bank will upload into the EDPMS with the full details. From where you received, what country, and the currency amount and the details will be uploaded to the EDPMS. So one more data is there. So we have seen the overdue bills, the live shipping bills. Now they started uploading inward remittances received as an advance. So 3 data. Subsequently, RBI said, okay, do one thing. There were a lot of pending is there. Advance remittances which are received, but no physical export is made. Because once physical export is made, you will submitting the shipping bill, we will be marking off the advance remittance. So all the pending data on advance remittances received and where shipment is not made, that also to be uploaded to the EDPMS system. So almost is finished. Now all the data is with us. So if you received an advance remittance in the year 2000 and you either you are not submitted the document to the bank or you are not exported, you are keeping the money of an overseas buyer with you, it is reported in the EDPMS. So now all the activities are coming under the EDPMS. Previously these were not there. These are where all the loopholes identified by the Shah Commission or the Special Investigation Team of the Finance Ministry, which is looking after some of the issues in mining and road, Karnataka and mining or something with undervaluation and road. They are looking into all these aspects, and these are the main gaps filled by EDPMS. So now I am adding one more thing. EDPMS I am adding a prefixing an I also. Import and export. Data processing and monitoring system. From June 2015, they said, okay, we will come up again with the import also. So the just opposite, vice versa. What all you do in export, the same is replicated in the import. Starting from the shipping bill from the customs, here what will come? Bill of entry. Here advance remittance you receive. Here what you will do? You will send an outward remittance. Here we said that overdue export bills are being uploaded. Here bill of entry outstanding is there. If you make any import, and if the value is 1 lakh US dollar and above, bank has to report non-receipt of bill of entry in a half-yearly statement. That we call it the BEF, bill of entry default. You upload that also. So 3 things is taken care: bill of entry, outward remittances, old outstanding bill of entry. Where importer has made a remittances, evidence is not submitted. Evidence of import is bill of entry. It's not submitted. So already the 3 things come to the picture. So we have export bill and remittance management. Similarly, import bill and management. Import bill, import remittance management. Paperless transfer. Then there was another issue was there earlier scenario. You imagine you are banking with the State Bank of India. You are simultaneously banking with the HDFC also. You filed the AD code with the customs of the State Bank of India. You generated the shipping bill and you want to submit the document with HDFC. Earlier, the HDFC will ask you come with an NOC from State Bank. We need to go to State Bank and ask them for an NOC. If they give, you have to submit along with the shipping bill an NOC from State Bank. Okay, we don't have any objection. You process it. In the new system, EDPMS, there is no paperwork. So how we will generate this NOC for a transfer? So system itself can generate an AD transfer. So here in the previous example, State Bank of India is the AD bank and the document is submitted to HDFC. So HDFC can initiate an AD transfer request from their system to State Bank of India. So it's a paperless. Earlier this was a paper-oriented NOC. Now here is paperless oriented. So if HDFC files a request, system will take that to State Bank of India. State Bank can approve it. Previously 7 days was given. 7 days, no bank will do anything. Because these are all additional numbers, nobody knows, nobody will do it. So every bank was sitting on it. So there was a lot of complaints. So RBI reduced that 7-day time tax to 3 days. Then also it was a problem. If HDFC sends a request for an AD transfer to State Bank, who will do it? Nobody will do it. No, across all the banks. So RBI said 1 day. So if you are not approving or denying in a day, either you approve or reject. Automatically during the day, it is deemed as approved, and the data will pass on from State Bank to HDFC. So AD transfer, this is called AD transfer. It's easier. So it's a paperless. Then there's a paperless transfer of shipping bills between the AD. Advance remittances received for export. That also can be managed, as I said. Extension and the write-off, it is also included. XOS, now RBI started self-generation of XOS, no involvement of the bank. Import bill management, as I said, the same. Instead of the shipping bill generation, bill of entry is being generated. And beautifully, they gave all the bill of entry from 1st April 2016 and uploaded to the system, because customs has given the entire data. So now there is no requirement of any paper bill of entry to the bank. You only give the bill of entry number, date and code. Bank can identify. Same as in the shipping bill, because I don't think the customs will stop the printing of the exchange and roll copies. It's paper based. It's a waste of paper. Outward remittance data management. Inward remittance is being captured in EDPMS. Outward remittance is captured in IDPMS. Data on bill of entry is there. There is the shipping bill is there. Here is the bill of entry is there. Exporter or tomorrow importer can also be caution listed, isn't it? Because if an importer is making a lot of imports and not making the money payment, making the payment, or he is making the payment in advance and no material is coming to India. So if RBI goes for it, or Enforcement Directorate can stop his transactions simple by blocking with the customs or the bank. Both of the things. So simple. Like the exporter being caution listed and after the banks don't to do any transaction with the client. Similarly, importer can, the same way, bank can be asked not to permit any outward remittances, and they can also ask the customs don't clear any goods for this particular import. So these are the possibilities in EDPMS and IDPMS. Additional modules, as I said, in 2015, June 15, they started with the caution listing and de-caution listing in a real-time basis. Reporting advance remittances, export outstanding statements, they stopped. And RBI themselves are doing it. Now, every regional office of RBI is checking all these things. Because every regional office of RBI is taking the data pertaining to their jurisdiction, and they are closely following with each exporter as well as the banker. If there is an amount, say a cap of $5 million or say 150 crores or something above, outstanding is still receivable beyond 9 months, RBI is sending letters directly to the exporter and asking to meet the officer in charge of the regional office, and they are discussing what is happening. Or if there is anything fishy, they are reporting to Directorate of Enforcement Director. We are also getting some reports asking, some details asking from the Directorate of Enforcement about a particular or one or two exporters and what is happening, whether it is the data integrity is there, whether it is the EDPMS is the right picture or not. So easy. Then the process. I said it's a purely centralized automated system. Any shipping bill you are declaration filed with the customs, EDI, computerized customs house, or airport customs, or road customs, wherever there is a computerized system.